Assalamu alaikum. I'm Carl Arrindell and you're watching InFocus. Now I'm delighted to be joined today by Adam Ismail Ebrahim, the Chief Executive Officer of the renowned and much celebrated UK-based Oasis Crescent. We last met at the end of the autumn quarter in 2015, following what was euphemistically referred to as Black Monday as China's stock market experienced a virtual free-fall crisis. Now, Oasis Crescent is the holdings company of a collection of multiple award-winning wealth management companies specialising in investment management and wealth creation. The investment group is widely recognised as one of the world's leading providers of financial products designed to meet the specific needs of socially responsible investors, including Sharia compliance. Now, the group has more recently been the recipient of the Thomson Reuters Lipper Award for the Oasis Crescent Global Low Equity Balance Fund over 3 years, as well as the IFN Award for the Oasis Crescent Global Property Equity Fund, which achieved Best Fund in its sector in 2015. Assalamu alaikum, Adam, and welcome again back to InFocus.
Wa alaikum salam, Carl, and to all the listeners and viewers.
Now, firstly, let me congratulate you on your success in winning the Thomson Reuters Lipper Award and the IFN Awards I mentioned in the intro. You seem to have swept what I think we could say the financial equivalent of the Oscars in a period of international economic crisis and within markets that were fraught with volatility. Can you give us an informed picture of the current world markets? Are the global markets now out of crisis mode?
I think the financial markets have been in crisis mode in different forms since the great financial crisis of 2008. But you actually have to go back. The seeds of it all was the emerging market crisis of the late 90s. And almost we kind of come full circle to being back at an emerging market crisis. So the global economy is still living, big part of the global economy is still living on life support. And so we must be very, very careful that the patient is still needing a lot of oxygen and support. So just this last week or so, the European Central Bank expanded that support, put more oxygen to keep the European economy afloat. And I'll talk through some of the short-term and long-term issues. And Japan has been doing that, and China's been doing that. And so Islamic finance is really there for all seasons, for all times. And in this volatile time, since 1997, 98, when we started, we've managed to put down a fantastic footprint despite these volatile times. In the short term, there are a couple of things to watch out for. In the next few months, we get the referendum on Brexit, which has a short-term implication and a profound long-term implication. And I'm not going to go into all the detail, but it will create a lot of volatility. Then you have the US elections a couple of months later, which, given the dynamics, and I'm not going to go into all of it in detail, but given the dynamics and that divergence from consensus, where the politics have gone, you should expect very, very substantial and significant economic and financial market implications of that. Longer term, you've got Europe still being needing support. You've got the UK still going through the process of rebalancing the books. So the budget comes up shortly, and you're going to most probably need another round of cuts to balance the books because the economy has been a bit slower. And then you have places like Japan, they just cannot get out of lower prices and deflation. And then the thing that must really worry us is the emerging markets in China. So given that kind of a potential very volatile environment, by the way, that's the environment that Islamic finance thrives in, and that's the environment Oasis thrives in. So yes, there may be a bit of volatility, but it creates a couple of things. It differentiates Islamic finance, which is investing in the real economy, real goods and services. It's based on substance. So a lot of the issues that are affecting the global economy is based on leverage, it's based on the mirage rather than the oasis, and it creates lots out of nothing. and you cannot do it. So very often you go through these long cycles. Sometimes there's short cycles. We're currently in a long cycle of rebalancing of books. So it takes, if you've created a lot out of nothing, you've got to kind of shrink it till you find something. But if you started with nothing, it's very difficult to find that. So we've got to balance that. But in Islamic finance, you can only grow based on the real economy, real value, real trade. And so we've chosen the right sector. Secondly, in our own philosophy and style, we epitomize that Islamic finance, and the rules and regulations that we follow is ethical. And so this is an environment that really an Oasis prospers and the mirages disappear.
Now, you mentioned we're here in London, in the UK, in central London. In the next couple of days, we're going to hear a budget announcement from our Chancellor, and many of the pundits have said that George Osborne has run out of options, that he will have no choice but to make savage cuts to public services in order to balance the books, as you put it. How will his decisions impact on the UK economy and on investment performance?
I think the decisions, he's been supportive of the economy to date, and he's been supportive of financial markets to date by lowering interest rates, curbing the fuel levy rises, amongst others. And the UK economy has been one of the stronger economies over the last 5 years. However, that is within the backdrop of Europe that is slower, in the backdrop of Brexit, in the backdrop of this in-Europe migration and out-of-Europe migration. So the people, migration from the poorer parts of Europe to the richer parts of Europe. So that's a big argument for Brexit, because you're getting people coming from those poorer countries to the UK, and you have to pay the social welfare. And so that we almost need to kind of deal with that in one way or another. Otherwise, you're going to have this misalignment of expenditure. And then secondly, you've also got this big issue, which is more of a geopolitical issue of the migration, which has to be dealt with. And you're going to have to create peace and harmony in the Middle East. Without that, you're going to just get a flood of people, because people will migrate if they feel unsafe. And so the backdrop of the UK economy is taking all of those into account, and therefore you most probably will have cuts in expenditure. And there most probably be lower increases in grants and pensions and things like that. And the state is effectively becoming smaller because it cannot afford to be the size it is, and means that the welfare part of the state has to be scaled back to more affordable levels because of this macroeconomic background and the geopolitical background. And therefore, you have to save more and take responsibility for your own and your family and your community's well-being. So no longer can you rely on this omnipresent welfare state. You're actually going to say, yes, the state is there, but increasingly it's going to be there for the absolutely needy. And all us healthy, vibrant human beings should get out there and start working, start building, start exercising, start creating, start with improving productivity, and start saving. And in that way, we then don't have to have these cuts because the economy is growing. And then the poorer members of the society and those who can least bridge the gap, because maybe the education, maybe other handicaps, maybe age, maybe, we look after them in a prudent way. So at the moment, we can be very pro-welfare state, or we can be very anti-welfare state. I believe that you must make sure that you look after society in the best way, but each individual, if they can, must make an effort for themselves.
Yeah, whichever way you do look at it, it sounds to me as though we're going to have people tightening their belts in the next short while.
Yes, very much so.
Now,
And it's been going on for some time.
Now, I wanted to ask you, because there's been a lot of talk about building a close relationship with China. We've been inviting senior figures to visit us in London and trying to encourage investment here. Is that likely to have any impact on the economy in Britain?
Yes, it is. London in particular, but the UK broadly is a major beneficiary of foreign direct investment. And with foreign direct investment, what you want with any investment, you want it well diversified from as many different people. It brings a closeness, it increases trade. So what it does is there's properties that are now being bought by the Chinese, populated, it raises, it creates employment. We start exporting more to China. We not only buy more from China, but we export more to China. We create more services to China. The UK most probably has a competitive advantage. China is long on manufacturing, and raw production, but they're short of services, and they're short of high-end and retail, and high-end goods and services. Guess what? The UK is long of those. So by getting closer to countries like China, there's a mutual benefit.
And a very huge retail market.
Exactly.
Yeah. Now, despite the uncertainties of the domestic and global economies, as you've talked, Oasis still has managed to achieve positive results in the last quarter since we last met. Can you give us a hint on the foundations of that success, which of course, without of course giving away all your secrets, and what your performance indicators say about the importance of your style of management?
Sure. So I'm going to use the environment that we're in. So today, never before, not in the last 100 years, have we been dealt with the framework that we've dealt with at the moment. If you invest in Japan, because inflation is negative, it's disinflation, prices are actually going down. Now you say that's good, but it's not. What you want is prices to be constant rather than rising rapidly or declining rapidly. So when prices are declining, you keep deferring your purchase because you're going to buy cheaper next week, next year. That slows the global economy. Okay? And when prices are rising too rapidly, you buy too much now and you get into debt. That destroys the global economy. So you want price stability. And where we're faced at the moment is in Japan and Europe. If you were to invest because prices are going down and you bought a government bond, you'd actually get negative returns for 10 years. Now imagine, we talk about positive, we want a positive return. Now that's the framework and the backdrop that we're operating in. Negative inflation, negative returns and some very key components of the global economy. And then this very tough economic environment. Now, what we do is we go find the best companies, we find the best management, we allocate the best assets and mix of assets, we find the best currencies, we find the best regions, geographies to invest in. And so this environment creates a lot of volatility. So it gives us opportunities to wait and be patient. And when the prices are very attractive to buy, we buy. So, not that long ago, the price of the company that owns Trafford Centre was very cheap. A country that owned Blue Water was very cheap. We bought some. And this creates great opportunity. In a nutshell, I'll use two products, and then our Crescent Global Equity Fund has got a third of the debt of the average fund in the world. Now imagine that you're getting this much greater volatility. Imagine the interest rates will move up over the next 5 years, and we've got much lower debt. Our profitability of the average company in our portfolio is 3 times higher than the average company out there. So a third of the debt, 3 times higher profitability, 50% more cash flow. and you're buying this at 30, 40% cheaper. So you're buying the greatest companies with low debt, with great management, great brands. So we find that fantastic. When we look at our property portfolio, we can get 6.5% income yield. That compares to 1.9% in the bond market and compares to 1.1% inflation. And remember, we spoke about some countries having negative inflation and some countries are having negative bond yields. So if you're getting 6.5% and you have a long-term vision and you focus on the long term and you ignore the volatility of the short term, I think you're going to make a huge amount. You're going to protect your wealth, firstly. The primary thing, you're going to protect your wealth. And secondly, you're going to grow your wealth. You're going to grow the standard of living of yourself and your family. And then what I like encouraging, what's good for you has to be good for society. You'll pay more taxes. So what's George Osborne art? You'll be more charitable. You'll give more to society. Your zakah will grow. Your sadaqah will grow. Your lillah will grow. And that is a great equilibrium. So we have a very, very big role to assist in the budget.
Well, you're describing a real oasis.
Exactly.
But let me ask you about oil prices. I mean, we've all watched as the price of diesel and lead fuel has dropped through the floor. But many people recognise that there's a bit of a correlation between the oil prices and Islamic wealth. And will have noted a slowdown in that wealth accumulation among high net worth individuals in oil-rich countries. To what degree have those shifts in oil prices affected investments performance generally?
So sure, they're all exporting countries that will be affected by a lower oil price. However, if you took a long-term view, when any price of any commodity is higher than sustainable, you attract new supply. So what was happening, the high oil price of $100 was actually attracting new supply from places like the Canadian oil sands, very expensive to produce, the US shale gas, and the oil-rich countries were actually losing market share. So what they've done is they've just said we're going to be producing at our level of market share. So some of the high-cost producers will go out of business, and you'll get an equilibrium. So from a very, very long-term perspective, what's happening now is a little bit of short-term pain for long-term gain. But many, many, many of these countries have actually had very prudent budgetary processes. For a long time, they've run surpluses. They're now running deficits. For a long time, they've accumulated massive sovereign wealth funds, which they have no debt. They've got massive sovereign wealth funds, so they can use their wealth to help them in the short term and see them through this transition. They're also liberalizing the economies. And by the way, by appointing somebody like Oasis, and we've seen a huge uptick in demand for our products in the region, you're actually diversifying your risk and you exposing your portfolio to different attributes like technology and healthcare, amongst others.
Now, you talk about the huge demand for your products and services. I was reading a report produced by the Malaysia-based International Sharia Research Academy for Islamic Finance, and they were saying that still only a small proportion of an estimated $11.5 trillion worth of wealth owned by Muslim individuals, institutions and governments is managed by Islamic financial institutions. The fact that most of Muslim wealth is still managed by conventional banks through conventional banking products. What's the reason for this? Is it the lack of ethical Sharia products available, lack of awareness of those products now on the market, or simply a failure of Muslims to understand their Sharia obligations? We
actually see that as the biggest opportunity the world has ever presented us, and we are very excited about that, because organizations like ourselves who are building best practice, great performance, great service, great administration, and building it on a global basis, building a global brand. You know, many, many years ago we said, you know, when people wanted to photocopy something, they said, let's Xerox it. When it comes to Islamic finance, we want to say, let's Oasis it, you know, and that's really, and what's happening is that we're getting that recognition, we're getting that cooperation. We, at the early stage of an industry and development, so we've got this enormous opportunity. And the more we do what we do every day, the more our Sharia scholars do what they do every day, the more our partners do what they do every day, we will realize that potential. So really it is to build a number of global brands, leading brands, that can compete with anybody and the best in the world. And the Lipper Award basically identifies and highlights that. And the more we get the awards, the more the track record, and we will. So I would read that not negatively. I would actually read it as the greatest opportunity to find the biggest oasis you can imagine.
Well, Adam Ebrahim, CEO of Oasis Crescent, let's hope that we all can take part and participate in a healthy and wealth-creating future with Oasis. Thank you very much for joining me today on Islam Channel.
Carl, thank you so much.